Oh, it's definitely earned me more money. Just like Decatur, they were paying 70 cents more for summer corn there in August. We were hauling corn 100 mile for 40 cents, and we're making 30 cents, and I wouldn't even known that price was probably on there. I wouldn't have thought of calling Decatur, but when you go to the Grower's Edge page, then it takes all that running around out of it for you.
Good afternoon, welcome to GrainTV. My name's Cody Bills, this is Kevin McNew. Today is the 25th, it's a Wednesday, which means we had ethanol production out this morning, but before we get to those numbers, let's turn over to the grain hedge trading platform and see where we closed off the day. Corn down 1 1/4 cents, soybeans down 7.5, and wheat in Chicago trading down 6.5 cents here on the day. Kevin, let's talk a little bit about ethanol production. What did we see?
Yeah, exactly, Cody. The ethanol numbers today were down from last week, off 17,000 barrels a day at 947,000 barrels. That's, negative, but not out of the ordinary for this time of year. You can see the normal seasonal trend in red. You can also see what we were doing last year in blue on this chart. So this is all in line with what we normally expect. A decline after the first of the year, or after the start of November, we start to decline and back off, and we're seeing that this year. What's still surprising is the amount we are ahead of last year. Still running at 5.7% above last year, year to date. That compares to USDA showing corn use for ethanol only going up 2.3%. So again, ethanol production figures are suggesting higher corn use than what USDA may be factoring in at this stage.
Absolutely. And so, of course, last WASDE report, we did see the USDA revise their ethanol or corn use for ethanol a little bit higher. Do you think it's possible that based on what we've seen in between last month and this month that we could still get maybe inching a little bit higher?
Yeah, I think they have to come up eventually, and given that the production numbers are not coming down as sharply as USDA is expecting, they're going to have to catch up to what is reality right now, which is a higher pace than what they have factored in. So maybe next month, but I think certainly 2 months out, they have to get caught up pretty soon here to where we're at.
Absolutely. Okay, so let's talk a little bit about soybeans. Of course, this has been a very volatile commodity here. We saw soybeans rally sharply yesterday and then sell off in the second part of the session. Today, we're down again over 7 cents. Right now, we're right around that 100-day moving average, and I really think yesterday what was driving this soybean trade is that trucker strike and barricade that they've been doing down in Brazil. Today, we started to see a little bit of a resolution here in the morning. We came in, the announcement that the road to the Port of Santos had been cleared. There's still congestion there, obviously, because there's a lot of trucks that need to go through to the ports, get grain to those facilities, and that was still very clogged. But the bottom line is that the striking truckers were removed. Now today at 11 o'clock Central Standard Time, basically the government as well as some representatives of this truck strike met together. Following that announcement, we got basically the government announced that they will not reduce the diesel tax to appease the truckers, but they said that the truckers were being very flexible here, and they see a possibility for a resolution of the strike here on the horizon. So to me, that's very hopeful. That's positive here. We could very easily get some more grain and some more flow on these roadsides of both fuel to these smaller communities, as well as grain coming out of the fields and moving them to the ports.
Right, and obviously that is negative for the bean market, because that means a flow of normal beans out of South America this time of year, which, yesterday was a different story. We were worried that was going to be disrupted.
Absolutely, and like you were saying, I mean, traders were concerned or expecting that, hey, if some of these obligations can't be met down in South America, they could very easily get pushed onto U.S. books, and that's why we saw a big premium get pushed into this U.S. soybean market.
On the domestic soybean front, we talked about this yesterday. Bean basis was backing off at some end-user plants, especially in places like Nebraska, Missouri, Minnesota, and the Western Corn Belt. So we had some basis declines as a result of that high price. Keep in mind, farmers, that the basis for soybeans is probably going to take a further slide as we get into March. We're seeing discounts for March delivery and April delivery versus spot delivery. So it may be time, as this board has given you a premium, to start thinking about some sales at this juncture.
And actually, with you saying that, it does remind me to announce that March contracts are going to be first notice day on Friday. That means anyone that's still in those March contracts, you're going to want to get out of them by the close of trade on Thursday there. Kevin, how do you think this roll is going to be affecting basis?
Yeah, we didn't see too much rolling activity yesterday. I suspect today there was a much higher amount of end users rolling. Crushing plants are going to be rolling. I think they're going to be dropping basis as a result of this roll because they just are not needing it as much as they were, say, a week or so ago with the pop up in the futures market.
So keep that in mind if you have any cash sales here that you're trying to make in the next couple of days. Tomorrow we have export sales out at early on in the morning. The expectations between 900,000 metric tons and 1.1 million metric tons here for corn. Soybeans expectations range between 450,000 metric tons and 650, and then wheat between 200 and 400,000 metric tons. Thanks a lot for tuning in. If you have any questions about what we were talking about today, give us a call. The number is 877-472-4607. We'll see you here on Thursday.